What's up, everyone? Thanks for tuning into the Goldston Standard. Today we're going to be just having a little bit of free-form conversation about everything that's kind of gone on in the past week. It's no secret that, GameStop has completely just taken off like a rocket ship. The stock market is, kind of going bonkers right now, and a lot of people are confused. However, I'm not going to so much focus on what's happening as much as I'm going to focus on what's going to happen in the future from this, because there is a lot of long-term implications from everything that's happening right now. But in order to just kind of give a baseline of what's going on in the market right now, essentially GameStop, they were a company that's slowly dying. Because of that, they're being shorted by a lot of financial institutions like hedge funds like Melvin Capital. And so in order to short something, you borrow a share from someone else and you take that share and then you immediately sell it for, say, $4. And then, so you have $4 in your pocket now. Now you wait, a year, 2 years, maybe a month, and then you sell that share again for, say, $2 because the stock went down. And then you give that share back to the person you borrowed it from. You still borrowed the share and gave it back like you promised to. However, you made a $2 profit from that because you sold it for $4 and you bought it back for $2. So that's basically what a lot of these financial institutions were doing, but they're doing it so much that they're shorting more shares than GameStop actually had. They're shorting around 138% of the shares that GameStop had. So say if everyone wanted to cover their short positions by buying back those shares and giving it back to the person they borrowed it from, there was not enough shares to do that. So obviously it created a short squeeze. And a short squeeze is whenever you see a lot of people are shorting a certain stock and you buy the stock. Because whenever you buy a stock, it goes up because it's an increase in demand. And so there's just an increase in people buying GameStop, making the stock go up even more and more and more. And then people on the other side of the trade who are shorting it, they see that, okay, the stock's going up instead of going down like I want it to do. And so instead of me buying the stock back at $2, they're having to buy the stock back at $60, then $120, then $316. You essentially see how you lost so much money from that trade. And that's what's happening to a lot of these financial institutions right now. In order to cover their losses, they have to buy those shares back because they have to eventually return that borrowed share back sometime. And so that's when the short squeeze really sets in, is whenever these financial institutions cover their shorts and they buy the stock back. And obviously, since they're buying the stock back, then the stock's just going to keep on going higher and higher. And it's a positive feedback loop, essentially. And so that's essentially what's happening right now. And it's a little bit confusing. And it's happened a few times before, like with Volkswagen back in 2000, I believe it was 2007. They had a short squeeze, but it wasn't to the extent of GameStop. So this is probably the most prolific short squeeze ever in the financial market. So it's pretty crazy to see this happening, especially in these unprecedented times. So that's a baseline of kind of what's happening with GameStop right now. But I want to kind of focus on the other fallout from this. And for me, the primary fallout is that's giving the wrong impression to a lot of people in the market, or a lot of beginners in the market who don't know a lot about stocks. And because we see a lot of tweets like this one right here, where people are talking about how financial literacy doesn't mean anything, stock market doesn't mean anything because it's just totally random and you can manipulate it. And there is some validity to the fact that the stock market is absolutely bonkers right now. It's not really tied to fundamentals anymore, and it's more or less people just kind of buying whatever they want based on narrative compared to buying based on the balance sheet or their earnings reports or anything like that. And so you can see that with stocks like Tesla, stocks like GameStop. And so yeah, sure, the stock market is going crazy, but that's no reason to delegitimize financial literacy, because the stock market at the end of the day is an investment vehicle, much like real estate, much like bonds, much like even cryptocurrency, that can really help build your wealth over the long term. Because the reality of the situation is that based on historical indicators, if you invest your money into S&P 500, you're usually going to receive 7% return on an annual basis, give or take 2 or 3 basis points. But you're going to receive a positive return on your money over the long term. And if you keep on doing that consistently, then you're going to grow your wealth. And, a lot like you can do Roth IRA calculators, and you can see that you can essentially become a millionaire as long as you're consistently investing in your Roth IRA and investing in, the total market or in the NASDAQ or the S&P 500. And so What I'm trying to say here is that the stock market is a great investment vehicle to grow your money based off of historical indicators. And so to delegitimize financial literacy because of the crazy thing that's happening in the stock market right now is not a good sign. And it's given a lot of people the impression that stock market is crazy. I want to stay away from that. And they're missing out on a huge wealth creating tool that is the stock market. So I want to touch on that a little bit. It's given a lot of people the wrong impression of the stock market. I also want to touch on GameStop and not the stock. I actually want to touch on GameStop, the company. It seems like a lot of people are forgetting what GameStop is and just forgetting the actual identity of it. If anything, I actually have a bullish view on GameStop after really looking at their earnings reports, taking everything in, and I'll explain why. And it's not for the conventional reasons that you would believe, because obviously GameStop is a dying company. It's a retailer during a pandemic, so that's obviously not a good sign. They've had to close stores, their revenue has slowed down, their profit has slowed down, this, that, and the other, right? We all know that. However, they are making a comeback in a lot of different areas. They got a new CEO in Ryan Cohen, who I think will be beneficial. However, I think a lot of people are overweighting how influential he'll be as far as making GameStop a truly successful company. They're making sure to deleverage their balance sheet, get rid of all that debt so that they can invest more in what really matters, like research and development, marketing, sales, all that good stuff they see from a lot of tech companies right now. But you also have their new strategy of focusing on an omni-channel presence, having their new app, they got their e-commerce platform, and they got their stores. And so they're focusing on having a omni-channel presence in the market, which is really good. They're focusing on getting their e-commerce sales up. However, the reality situation is that they're just in such an incredibly competitive market that in reality is, it's going to be very hard for them to succeed. And they're really going to have to focus on differentiating themselves in a plethora of different areas in order to succeed against the incredible competition that they have in the gaming industry. But their saving grace is really this whole fiasco playing out. Instead of their brand being tied to getting $10 for your PlayStation 3 that's only a year old, the brand's going to be tied to the ultimate fight against Wall Street and the ultimate win for Main Street when it comes to financial markets. GameStop has a positive connotation around it now. It's gotten so much free PR from everything that's happened, and that's positive PR too. And so, it's basically a week-long commercial for GameStop and why you should invest in GameStop and why you should support GameStop, because it's not just GameStop. It's also a movement for people on Main Street. Their motto is power to the players, and that's really the consensus around GameStop right now, is that it gives power to regular people, the people on Main Street compared to people on Wall Street. And that has nothing to do with their industry or selling video games, but that's just a benefit of the free PR that they got. And so GameStop has benefited a lot from that, and so that's why I think they'll actually have some place in the market and be successful long term because of all the great PR they got from this, and it's really revived their company. And then the last thing I wanted to focus on was Bitcoin. You might be wondering how Bitcoin ties into all of this. The reason why a lot of these brokerages like Robinhood and Charles Schwab restricted trading on GameStop, AMC, BlackBerry is because of the clearinghouses. And clearinghouses are essentially the middleman between the buyer and the brokerage. And so whenever I buy a share of GameStop, that means it has to go to a clearinghouse because it takes up to 2 days for that trade to legally settle. And so it goes to a clearinghouse. And during that time, my brokerage, they have to cover that trade with margin with the clearinghouse because of the risk that I might default or the brokerage might default. A lot of people are buying GameStop. A lot of people are buying these highly volatile and high risk equities like GameStop, Nokia, BlackBerry. And because they're high risk, that means the brokerage has to cough up more margin to the clearinghouse. Namely, Robinhood didn't have enough margin to cover all these highly volatile trades in order to cover their position in the clearinghouse. And so basically that's essentially why they shut down their trading, because they didn't have enough margin to cover their butts if everything went bad. But how that ties into Bitcoin is because blockchain technology would be able to solve all those problems, as far as the fact that blockchain technology is able to verify those transactions almost instantaneously, usually within 15 minutes it can verify a transaction like that, and you don't have to deal with all the archaism of the financial institutions and the banking system that we currently have, where you have to wait 2 days for funds to settle, You have to wait forever for transfers, this and the other. So it just goes to show that Bitcoin and its main value proposition of blockchain technologies continues to validate itself in the market, and that's just going to increase demand. Because Bitcoin is around 18 million coins right now of its total 21 million that gets capped out at, the supply is also constricting too. So, whenever you have a constricting supply as well as an increase in demand line, then obviously the price is going to go up. And then on top of all that, you got the fact that big institutions like Square, like PayPal, are making huge investments into Bitcoin just to further legitimize it even more. Now, on top of all that, you got the fact that 95% of Bitcoin is owned by an institution or a person that owns more than one Bitcoin. So it shows that there's a lot of big money in Bitcoin right now. So a lot of financial institutions are backing it. So you got the archaism and everything going crazy in the financial markets right now that's legitimizing Bitcoin. You got blockchain technology that's further legitimizing Bitcoin. You got big money investing into Bitcoin, which further legitimizes it. Then you also have Square and PayPal and other bigger companies in the financial tech industry investing in Bitcoin, which just further legitimizes Bitcoin. Then you also have the fact that it's a constricting supply of Bitcoin and an increase in demand of Bitcoin, which just further legitimizes it. And so, I believe the demand for Bitcoin is going to continue to grow. It's just going to increase in price. It really should reach a price target of around 100,000 by the end of the year, in my opinion, if everything goes correctly. And that's on top of the fact that it's a bet against the US dollar, especially during these times where we're risking high inflation because the Federal Reserve is just printing so much money in order to prop the economy up. And so Bitcoin is the perfect equity to kind of counterbalance that, because it is an asymmetrical, non-correlated asset to the financial markets. So a lot of exciting stuff going on with Bitcoin right now. That's kind of just my thesis on everything going on right now. So thank you for tuning in. Thank you for watching this long. I appreciate you. I'll be back again later this week, and we're going to be talking about an exciting new company that I've been researching and have made a big investment in. So stay tuned for that, and I'll see you guys later.